Does technical analysis work, or is it a bunch of reading tea leaves and smoke and mirrors and hogwash? Hi everybody, Joe here. I have been investing for 25 years and I have tried every type of investing under the sun, and let me tell you, technical analysis absolutely works, and it works really well. Why? Because of supply and demand and self-fulfilling prophecy, both of which is simple human psychology. But there are two big caveats. Let me share those caveats with you first, then I'll elaborate on those other 2 points regarding why it does work. We'll look at a few charts to get my point across, and if you make it to the end of this video, in fact, if we all make it to the end of this video, we'll see if I make it, I have a top secret stock to show you that's looking really strong right now. Before we begin, of course, let me just remind you, my lip itches, sorry. Before we continue this video, let me just remind you, this is not investing advice. This is just for education and entertainment. Wow, I almost got derailed there. So here are the two big caveats. One, long side technical analysis only really works well in a bull market, and to a lesser degree in a neutral market. When the market is trending down, technical analysis is prone to failure. Stocks break out and then squat intraday and pull back into the pattern, or come out through the bottom of the pattern. Support lines, which work really well in bull markets, tend to get bounced on. A stock will hit the support line, pause for a day or two, splat like an egg, and then continue down. Or even worse, the stock will crash through those support lines like those lines aren't even there. Now, of course, short side technical analysis does work pretty well in a bear market, but there are some real tricky intricacies to the short side, and most of us should stay away from that. So we need to have a bull market, an uptrending greater market for technical analysis to work well. And when we have a hot market, stocks break out of patterns and they quickly extend to 20%. Then they set up a new base pattern and they break out of those, and they do that 3 or 4 or 5 times, and it works really great, and you can make a lot of money in a hurry. Now let me let you in on a little secret. During a bear market, long side technical analysis doesn't really work very well, but guess what? Fundamental analysis doesn't work well either. Many of us have been buying stocks with amazing fundamentals, triple-digit revenue, triple-digit earnings, and what's been happening? The stocks have been going lower and lower as the whole market gets discounted, right-sized, I guess, to use a euphemism. The second big but, well, that didn't quite sound right, is that news will always trump technical analysis. If you have, on the macro level and on the stock level, if in the macro environment, the Fed says something very negative or very positive, it's going to lift or sink virtually all boats, regardless of the patterns. And on a stock level, if major news comes out, earnings, unexpected news release, the CEO gets hit by a falling piano, it doesn't matter what pattern the stock is in, the stock is going to move correspondingly. But in a bull market, technical analysis works really well. And when you combine that with some basic knowledge of fundamentals, accelerating revenue, accelerating EPS, margins improving, that's really how you knock the ball out of the park. So the two reasons why I explained that technical analysis works are supply and demand and self-fulfilling prophecy. So let's look at one of this little hidden gem here, AKRO, A-K-R-O, and talk about supply and demand. You see, a stock chart is simply a depiction of the supply and demand of the auction of the stock's shares. So if this is the 1-year chart, so if we look at September, it made a high. It made a high, the price was exhausted, it pulled back, buyers came in, and when it got to the previous high, guess what happened? These trapped buyers seized the opportunity to get out. They bought here at 26. They held for almost 2 months, irritated, and when it came to the previous high, they seized the moment. They got the heck out. Supply, right? And then when it came back down to 20 or so, we have some demand. The value investors felt that the stock would rally again like it did previously when it was at 20, and they started to buy it up. And then, as you know, the greater macroeconomic environment pulled heavily on this stock and the entire market, and it broke into a head and shoulders top, right? Shoulder, head, second shoulder drooping below the first. That's a textbook head and shoulder. You draw the neckline, you wait for it to retest the neckline. It actually came above it, and then it rolls over, and so you get out here, and if it does this, you think about shorting right there. Eventually, after a few months, the stock rights itself, it starts a new rally, and where does it pause? Right here at 14. Why? Because again, there are a bunch of trapped buyers here who are itching to get out. So that causes resistance, so the stock pulls back. Where does it pull back? It pulls back to support. This is an area of demand. Technical analysts like myself see this resistance point at 12 and realize that what was once resistance will become support. So people start buying at this line. Let's draw it in. So there's demand down there at 12. And this is kind of a self-fulfilling prophecy because we can anticipate there to be support there. People buy in anticipation of that, and it becomes support. Then we have this spectacular gap up. And where does it stop? Right at the previous high. Why did it gap up almost to exactly the previous highs? Because again, these trap buyers, a lot of these buyers, institutions had big sell orders programmed right here between 26 and 27, and other swing traders said to themselves, that's a likely point of resistance. When it gets there, I'm going to sell. And so we have, sure enough, resistance at this point, and then supply slowly drives up. All the sellers are shaken out, and then we have continued demand, and away it goes. Look here. Look where it paused, right at the previous high. Again, we have resistance. These trap buyers are going to sell. It made it pause for a day, etc., etc. This is called a pause pivot. That's just a little, I don't know. That's a little side note. We could do supply and demand all day long. Here's Tesla. This is back in 2021. Now, everybody and their grandma has read about William O'Neill's cup with handles. So we see a nice cup forming. When it gets here at 250 at prior resistance, we anticipate a handle to form. Sure enough, there's our handle. When it starts to break out, what do breakout traders do? They buy it, which causes it to break out. It's kind of a self-fulfilling prophecy, right? Then we have a handle on top of a handle. When it breaks out, what do buyers do? They buy it. And that drives the stock up. Sure enough, look at this. Here's another little handle. William O'Neill's got to be happy about this one. Makes a little handle, breaks out. What do people do? They buy it, right? And then here at 400, you know, so many investors were thinking, I'm cashing out when it hits 400. So it did. So it begins to bleed off where does it go? Does it just fall blindly to some random spot because of the random walk on Wall Street? No, it falls right down to the lip of the cup at 300, which is a nice round number. Why? Because of demand. Value buyers program their computers to buy at 300. Technical buyers know that that is a likely spot of support, so they buy at the likely spot, which causes it to be support. Let me show you one more thing here. Here's the S&P 500 yearly chart, and we had this great tradable rally June 17th, I think, and look where it went. Did it just stop at random? No, it ran up exactly to its 200-day moving average. Why? Because many institutions and retail investors, when there's a initial rally, they decide to sell when it hits the 200-day. It's a self-fulfilling prophecy. When it gets to the 200-day, they all sold. Therefore, the 200-day acted as resistance. This line doesn't even exist. It's just a mathematical formula. But because we all pay attention to it, we all decided to sell there, it works as resistance. Well, that's the end of your little, my argument as to why technical analysis works. Let me tell you, I've tried everything else. I started off digging through financial statements with using the Motley Fool method of finding undervalued companies and so forth. But technical analysis paired with some basic fundamentals, in my book, is the way to go. If you've made it this far, please consider liking and subscribing. And I just added merchandise to my channel. There's a cup for sale now and a couple t-shirts. The link is in the description below. And here's the chart that I was going to tell you about, the top secret chart. It's really not much of a secret. It's Lilly, an outstanding biotech. And here is the 10-year chart, and you can see after this long flat saucer in 2015, it really has been an outstanding long-term hold. Definitely oscillates though, doesn't it? And here are the numbers. This is from MarketSmith. Notice consistent yearly growth in EPS, dividend yield of 1.2%, strong numbers for the most part, a weak last quarter, as has most stocks have had a weak previous quarter. And looking at the daily chart, Mark Minervini just bought the little pullback buy right here. That was on, let's look. Mark Minervini bought it on October 4th. I bought it with him. It's pulled back with the weak market from the other day. But let's look for it to build out a nice little handle and tighten up, and maybe it'll give us another entry point. So this is one to look at buying soon, and maybe to hold as a long-term hold. If you do this, buy a very small position and make a 10% max stop, 5 to 10%, because the market is really weak right now, and even the strongest stocks are prone to failure. Well, I've rattled on long enough. Let me know what you think about technical analysis, and if you disagree, if you think it doesn't work for beans, that's okay. I'm glad to hear your counter arguments, or if you want to talk about Lilly, that's great too. Okay, let's hope for a better week. This week, Minervini says we're in the 7th inning of the bear market. I'm hoping we're in the 9th inning, and the key will be to see stocks proliferating out of bases and for breakouts to start working again. Then we'll know that the market is flipped. All right, take care, everybody.